Hi there, Marques Brantley of Boardroom Minutes. Welcome back. Glad to have you viewing. Our episode on today is Board Governance 101, and that's what every director must know. But before we go into our topic, if you haven't subscribed to this channel, why don't you do so? And then at the end of this episode, if you happen to like it, then hit that like button. It would be much appreciated. Again, welcome back to Boardroom Minutes, which is your premier channel for clear, concise insights into the issues that shape today's boardrooms at for profit corporations, nonprofit organizations, and religious institutions like churches. If you join the board and you have the thought that you're not sure what I'm supposed to do here, well, this episode is for you. Board service is an honor, but it's also a serious responsibility. Whether you serve on a board for a corporation, a credit union, a not for profit or nonprofit organization, or a church, every director must understand the basics of board governance. And that's what we're going to be talking about today. We're going to break down what every board member should know. We will discuss the fundamentals that turn good intentions into great leadership. But first, we're going to start with the simple question. What exactly is governance? What is board governance? Well, governance is how a board guides, oversees, and protects the organization. It's not about running daily operations. That day to day responsibility is management's job. However, it's about setting direction, ensuring accountability, and protecting the mission and values of the organization. Think of it like this: if management drives the car, then it's the board that holds the map or the GPS, if you will. And together, they make sure everyone reaches the destination safely. Once again, governance is not management, it's oversight, direction, and trust. Why don't we talk about the three core duties that every director must know? These are important core principles. So listen carefully. The first is the duty of care, and that involves board members making decisions with diligence and informed judgment. What would a reasonable, prudent person do sitting in that seat? And that's what you would have to ask yourself. And that type of person is one that dots his I's and crosses her T's. And that means reading the reports that include financial statements, that includes audits. It also means asking the pertinent questions. And then it's about attending meetings prepared. You don't want to just read your board package at that moment. Once you sit in your chair, you should have already read it. If not twice, at least once. Be prepared. And if you don't understand a report, if you don't understand the financial statement, something doesn't look right, then you need to ask questions, because good questions protect the organization and also your reputation. It's very important. Next, the duty of loyalty, and that's putting the organization's interests above your own. You have to avoid conflicts of interest and avoid personal gain. An example: if a decision could benefit you or your family, then you need to disclose it. And then you need to recuse yourself from the vote. What if a trustee owns a company and that company bids on the project that the church is involved in? Well, that trustee needs to step aside, not because they're untrustworthy, but because integrity matters more than influence. And it's about the appearance of impropriety and not necessarily impropriety. You just have to avoid conflicts of interest and personal gain. That's the duty of loyalty. And then, third, we're talking about the duty of obedience, and that's staying faithful to the organization's purpose, the mission, staying faithful to the bylaws and the rules that govern the organization. Boards can't act outside their authority. So it's important for you to know the rules. Obedience keeps the board aligned with its mission and makes it accountable to its members, its donors, as well as its shareholders. Let's give an example. Let's assume you have a nonprofit organization that receives a donation for scholarships. You cannot then take that money and then spend it on general operating expenses. Because what you're doing is that you're violating the donor's intent and you may be violating laws or regulations. So it's important for the board to make sure that things are done in alignment with regulations and rules. Now, what do boards actually do? What is the function of a board? What does board governance look like? Well, let's look at some responsibilities. One is setting the vision and the strategy, and that's defining long term goals and also approving the strategic plan. That's the board's responsibility, approving the strategic plan. Management helps to create the strategic plan, but in collaboration with the board, it's the board that approves it. Another responsibility is to hire and then to evaluate the CEO or the executive director. And that is a key function of the board because it is the CEO or the executive director that leads the organization through day to day operations. And once you hire that CEO or executive director, then it's up to you to assess that person's performance on an annual basis. Another responsibility is to oversee financial health. The board's responsibility is to approve budgets, review the audit reports, and then also monitor risk. Very important. Then also, it's the responsibility of the board to ensure legal and ethical compliance. We talked about the duty of obedience. We have to make sure that board members uphold the laws, policies, and the codes of conduct regarding the organization. And then finally, you are representing the stakeholders, whether it's a credit union where you have members, a church where you have members, nonprofit where you have donors, or a corporation that has shareholders. You're the voice of those stakeholders in the boardroom. And you exist to protect the mission, the funds of the organization, as well as management and staff. Now, how do we become an effective board member? Well, let me just say this: the best board members are not necessarily experts, but what they are, they're engaged, they're ethical, and they're teachable. And here's what effective board service looks like: board members that show up, in other words, they are consistent in their attendance, they speak up because they ask insightful, respectful questions, they follow up because they hold management accountable with grace, and they read up by staying informed about trends in their respective industry or sector. Your value on your board is not your title, but it's your contribution. Let's give an example. The quiet board member who reads every report and asks one clear question about risk often adds more value than a board member that appears to be loud and unprepared. Trust me, I know. So we're going to end it right there. We just want you to know that serving on a board is a sacred trust. It's about good stewardship, leadership, and accountability. And when you understand the principles of board governance, you don't just attend meetings, you help shape the future of that organization and the communities that those organizations serve. So, whether in your first year or your 20th year, this is a good refresher of going back to the basics. And the basics are be diligent, be loyal, and stay mission focused. Well, I hope this was beneficial to you. And again, if it was, why don't you hit the like button or hit the subscribe button. Our topic today was board governance 101, what every director must know. Thank you for tuning in. Hope to see you on next week for another episode of Boardroom Minutes. This is Marcus Brantley signing off. See you soon. Take care.